Hey, it's Clay Trader, and this will be a video chart on HMNC, Hondo Minerals Corporation. Before I get started, I would like to note to please check my IRP disclaimer. With that being said, nice looking chart here. I know a lot of people are talking about this one during this move here, where it just seemed like the price refused to go down, and then we did have the pullback. Before I get that, I want to point out one area, and what we want to point out here is this is essentially where the price started before this insane move happened. So right here around the $1.67 level. So keep this level in mind as we go through the history of the chart. Insane move happened. Then we pulled back, but look right where it pulled back to. It didn't go all the way back down to where it started. Now, why is this significant? Why does that matter? Well, if you're familiar with charts, you know that the name of the game is uptrends. The name of the game is higher lows. And sure, maybe this wasn't the pullback that a lot of people would have wanted to see, but the point is this low was higher than where it had started right here. So that technically is the beginning of an overall uptrend. So by taking that and then drawing a trend line, you can see that we have an uptrend right here for the overall chart perspective. Now, if you're a day trader, sure, maybe this trend line doesn't pertain to you, but the point of it is to show that this overall chart is in an uptrend based on where it started, where this low was right down to, and then where it has since bounced off from there. And then the other confirming factor that we are in an uptrend is right here, this 50-day simple moving average that it's just started to form here. You can see that this has a clear upward slope to it. So if this trend line doesn't satisfy you enough, then here is the other aspect that confirms that we are in an overall uptrend right there. Now, short term, we're in a little consolidation period. Nothing wrong with that. You can see that we're in essentially a little channel here. The top of the channel. Let's try that again here. The top of the channel being right here at the $3.10 area. So let me change that to red because this is a level of resistance. I'll just leave it nice and skinny because it is just a short-term level. This level up here at the previous high of 387 is going to be more of an important level of resistance. But short-term wise, right here at $3.10 is a resistance. And then we also have this aspect, which is pretty nice, the short-term ascending triangle that we have taking shape. If you pull up any textbook, they're all going to tell you ascending triangles are bullish. So what we have going on here is both in the long term, we have an uptrend, and now in the short term here also we have this ascending triangle. So with a break of the $3.10 range, keep an eye on the volume. The bigger the volume on the breakout, the better. But as this chart has shown through the past history, this isn't me speculating. I'm just pulling up the proof right here. Past history has shown this thing can really move. So, with a nice strong volume break of the 3.10 area, the first pit stop and first area is going to have to fight through is going to be right up here at the 350 level, where this previous high is. But then after that, it's all the way up until this 387 level for where the next level of resistance would be. So, kind of case in point, keep an eye on this short-term bullish chart pattern right here, and if this ascending triangle can push up through it, then you're going to want to keep your eye on these future areas of resistance. If the price does fall through, we do still have our uptrend support line right here, and then we have the 50-day simple moving average. Obviously, ideally, we'd like to see it explode up through, but it does still have some other support levels if this short-term trend line isn't able to hold right here. So if there are any other questions on the chart, please let me know. If not, once more, this was HMNC. Thanks for listening.